Good morning, I'm Maiki Oreta and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. The headlines. The Philippines cancels currency trading today following the suspension of government work and classes in Luzon due to Tropical Storm Christine. The International Monetary Fund maintains its growth projections for the Philippines. And the country slipped slightly in a global ranking of economies engaged in sustainable trade best practices. And public sector foreign borrowings approved by the Bangko Sentral ng Pilipinas decline this year. First, a look at the financial markets. U.S. stocks again end mixed as investors await more earnings to assess the health of American companies. The Dow Jones Industrial Average was unchanged, down by less than 0.1%, while the S&P 500 was also unchanged, down by less than about 0.1%. Now, the NASDAQ, the tech-heavy NASDAQ, is higher, gained 0.2%.
They're sending a message that the U.S.'s fiscal debt position, both the fiscal deficits as well as the long-term debt position, is not tenable, and the bond vigilantes, so to speak, are pushing back. And I think stocks are, starting to digest that. Obviously, we're coming into an earnings season, and this is against the backdrop of the so-called soft landing, which looks like it's going to, looks like the Fed is going to pull it off. But again, we've been saying for a long time that comes at a cost, and that cost is, record, fiscal deficits, which, by the way, don't look like they're going to decrease anytime soon, irrespective of who's in the White House.
Over in Europe, markets closed lower with earnings still in focus. The regional stock 600 was down 0.2% as most sectors were in negative territory. Here in the Asia Pacific, stocks opened the trading day higher. The Nikkei 225, however, is down 0.2%. On watch today is the trading debut of Japan's subway operator, Tokyo Metro. Over in the commodities market, oil prices fall as a U.S. industry group signals a rise in nationwide crude inventories, while the Biden administration renews efforts to secure a ceasefire in the Middle East. Gold is down by less than 0.1% to $2,729. Currency trading in the Philippines is canceled today due to the suspension of government work and classes in Luzon caused by Tropical Storm Christine. Malacanang announced that agencies responsible for providing basic and health services, as well as those involved in disaster response and preparedness, will continue operations. Work suspensions for private companies, however, are left to their discretion. Several areas in Luzon and in the Visayas are now under signal number 2 as Tropical Storm Christine gains strength. The storm is expected to intensify into a severe tropical storm before making landfall in Isabela or northern Aurora either later tonight or by Thursday morning. While the International Monetary Fund expects the Philippines to keep growing, it says that the growth won't be as fast as the government hopes. This highlights the challenges the country faces in meeting its targets. The IMF expects the Philippine economy to grow by 5.8% this year, which is lower than the government's goal of growth of between 6 to 7%. For 2025, the IMF predicts growth of 6.1%, also below the government's target range of 6.5 to 7.5%. The IMF recognizes that the Philippines has successfully overcome several challenges in the recent years. They add that growth in 2025 will be driven by looser financial conditions and by increased investments. The Philippines slipped slightly in a global ranking of 30 economies practicing sustainable trade. The country dropped from 12th place last year to 13th in the Hinrich IMD Sustainable Trade Index 2024. While the report recognized the Philippines for its strong labor force, growth, and real gross domestic product, it also pointed out challenges in trade costs, technological infrastructure, and in inflation. Meanwhile, New Zealand claimed the top spot on that list, with the United Kingdom and Australia ranking 2nd and 3rd, respectively. This slight drop for the Philippines underscores that while the country is making progress in some areas, significant improvements are still needed to fully meet global standards in sustainable trade. On another front, Vice President Sara Duterte is calling on both the government and the private sector to work together to create more opportunities for Filipinos. Duterte made that statement during the opening of the 50th Philippine Business Conference and Expo in Pasay City, an event highlighting local products from micro, small, and medium enterprises with a goal of deepening collaboration between the public and private sectors.
The government do not have the monopoly of brilliant minds. In fact, many geniuses are found in the private sector. That is why it is very important that there should be collaboration between the government and the private sector, the business sector. Kaya paborito ko na umattend talaga dito sa PCCI para din magpasalamat.
The collective voice of the private sector that emerged from this conference will then be forwarded to the government in form of the policy recommendations as it has been in the past years. The growth that benefits not just few, but all sectors of our society.
This partnership is essential for creating jobs and driving sustainable development across the country. Public sector foreign borrowings approved by the Bangko Sentral ng Pilipinas are declining this year in a shift that could affect the country's debt management strategy. The central bank approved nearly $11 billion in borrowings in the first 9 months, representing a 4.7% drop compared to the same period last year. For the third quarter alone, the BSP's Monetary Board approves $3.81 billion in foreign loans, slightly lower than the $3.9 billion approved in Q2, but up 36% from the same period in 2023. This shows a balanced approach to meeting funding needs while keeping debt levels in check. All such loans must be cleared by the Monetary Board to ensure that the country's foreign debt remains manageable and sustainable. Southeast Asia needs to increase clean energy investments to $190 billion, or about 5 times the current level, by 2035 to achieve its climate goals. That's according to the International Energy Agency, or IEA. The agency says electricity demand in the region is set to grow at an annual rate of 4% in the coming years, with clean energy sources projected to meet more than a third of the growth by 2035. But it will not be enough to rein in Southeast Asia's carbon dioxide emissions, which are forecast to increase by 35% between now and mid-century. The IEA also expects rapid economic expansion to pose challenges for energy, security, and climate goals. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. We have this just in. Globe Telecom officially appoints Airtel Nigeria's former CEO, Carl Cruz, as its next president effective January 1st. He will also reportedly be nominated as director, president, and CEO for election at the company's next annual stockholders meeting. This comes as longtime chief Ernest Cu is set to retire after 15 years. Cruz brings a wealth of experience to Globe, having spent over 30 years at Unilever before joining the telecom industry. Now, trading at the Philippine Stock Exchange opened just a few minutes ago. Let's take a look at the initial figures. After a tepid start to the trading week yesterday, where the PSE index was down by 0.1%, right now it's succumbing to selling pressure, albeit just a little bit. We're down by less than 0.1% to 74.11. Analysts say that investors are waiting on the sidelines, looking for fresh catalysts such as Q3 earnings, possibly. Now, the All Shares Index is down as well. Actually, it's flat, very little change, down by less than 0.1% to 40.85. The financials, holding firms, and mining and oil counters are slightly in the green, while weighing the PSE index down is the industrial counter, the services counter, and the property counter. Now, to help us make sense of these numbers, we are joined on the line by the founder and chief investment strategist of Trading Edge Consultancy, Ron Acoba. Good morning, Ron, and thank you for being here with us.
Good morning, Maiki. Thank you for having me.
Okay, Ron, since hitting a low of 61.58 on June 21st, The PSC index has risen by about 22%. It hit a high of 75.54 earlier this month, October 7. That said, technically speaking, we're still in a bull market. How would you describe where we are at this junction, Ron?
Well, by book definition, up 22% from the recent low. So by that definition, the index appears to be up in a bull market already. But the way that they see it, I would tend to agree, because from a technical, at least from a technical standpoint, more importantly for me, the index has already freed itself from its two-year consolidation the moment that it surfaced above its key resistance of 7,000 level. And if you notice, the moment that the index finally crossed the 7,000 marker, it achieved the 7.6 in a matter of 2 to 3 weeks. This leads me to believe that the index is indeed at the very early stage of a primary multi-year bull run.
Sounds exciting. But right now, you know, for the past couple of weeks, we've been range bound between 74 and 75, having a very hard time reaching the higher band of that. We're in the last week of October with a lot of near-term uncertainties. There's the Federal Open Market Committee. They're going to be meeting on November 6 to 7. We want to get your thoughts on the probability of a rate cut there. But before that, there's also the U.S. presidential elections and the uncertainty over the U.S. fiscal position, plus the geopolitical tensions and increases in the price of oil on account of it. Going back to the first point, the FOMC meeting, how much of a rate cut are you expecting?
Well, as it stands, if you look at the futures markets, there's about, I believe, 80% probability that the Fed may cut again by another 25 basis points. Now, looking beyond that, in the next FOMC meeting in December, as it stands, there is a probability of about 60% that the Fed, after a 25 bip cut in November, will cut by another 25 bip in December. So seeing this potential cuts, this will actually validate that the U.S. is already indeed in the easing cycle, which bodes well for risk-taking.
As we are, we're in the easing cycle. The BSP just cut interest rates by another quarter percentage point last week, but it wasn't the catalyst that the market was looking for. Why is that? Why wasn't it enough to bring us above 7,500, Ron? What's keeping us at this range?
Well, obviously, as you've mentioned, the index has already risen by 22% inside just 3 to 4 months. So that in itself would already warrant some degree of profit-taking actions, and we're seeing that. The index has retraced from its 7,554 high to a recent low of 7.4, and since then the index has traded flat. So we need that process of profit taking for the index to have a more sustainable up leg down the road. And yes, I agree with some of the analysts that now that the first round of cuts are in the books, what's next? So what's important, at least from a risk point of view, is that we see a sustained cuts, interest rate cuts, both in the U.S. and here, that would lead to lower borrowing costs, which of course would be beneficial for stocks.
Do you think another 25 basis point rate cut is on the table for December here at home in the Philippines?
Yes, I would like to believe so, especially given the fact that domestic inflation has already cooled down to a low of 1.9% in the most recent month.
Okay, all right. Thank you so much, Ron Acoba, the founder and chief investment strategist of Trading Edge Consultancy.
Thank you.
We're taking a quick breather. Basis points will be right back. Welcome back to Basis Points. The Enrique Razon-led Manila Water completes the sale of its stakes in 2 Bulacan water utilities worth 1.02 billion pesos. Manila Water confirms that SMC Bulacan Water Services, owned by Ramon Ang, has fulfilled the requirements to acquire 90% of the shares in both Bulacan Water Company and Obando Water Company. The proceeds will be used to fund Manila Water's other strategic projects, helping to support its expansion and improvements. This deal strengthens Ramon Ang's water holdings in Bulacan, where San Miguel operates a province-wide bulk water supply system. This move is significant for the Philippines as it ensures more investment and improvement in water infrastructure, which is crucial for meeting the country's growing demand for clean and reliable water supply. Meralco Power Gen Corporation, led by Manny Pangilinan, is exploring the possibility of an initial share sale as investor demand for renewable and green energy companies continues to rise. This comes after reports that President and CEO Emmanuel Rubio is considering a potential public listing within the next 5 years. However, MGen Senior Vice President William Pamintuan emphasizes that these plans are still in the early stages and have not been finalized or submitted for the board's approval. MGen currently owns SP New Energy, which last month secured $600 million from UK-based Actis to develop a solar farm and battery project. This project, north of Manila, will become the world's largest integrated solar and energy storage facility, a major boost to the Philippines' renewable energy capacity. Megaworld, the flagship property firm of billionaire Andrew Tan, expects to generate 3.5 billion pesos from its latest residential project. The Parisian-inspired St. Marcel residence will be Megaworld's 4th residential condominium in its capital township in Pampanga. The 17-story tower will feature 361 smart home units, catering to the growing demand for themed residential developments. Megaworld says this project is designed to appeal to younger buyers who are driving the demand for innovative and stylish living spaces. This project is expected to be completed by 2030. Elsewhere in the world, overseas, shares of Starbucks fall around 4% after the company suspends its annual forecasts, raising concerns in the business community. Starbucks pulls its outlook for the next year as new CEO Brian Niccol takes over, facing the challenge of reversing declining demand. Niccol, who previously turned around Chipotle Mexican Grill, admits Starbucks needs to fundamentally change its strategy. This move creates uncertainty for investors and business leaders as it highlights shifting consumer spending trends. The company also expects to report a drop in fourth quarter sales and profits, adding to the concerns. On another front, Hyundai Motor India's $3.3 billion initial public offering, the largest in the country's history, falls flat on its first day. The stock plunged 13% during its debut, leaving investors both surprised and disappointed. Analysts had predicted strong demand for the automaker, but weak market sentiment and growing concerns over India's auto sector derailed those expectations. Despite this rough start, Hyundai India remains optimistic that the growing demand for electric vehicles will boost its shares in the future. This listing is Hyundai Motor's first outside of South Korea, and it comes at a time when India's equity markets have been rising sharply. For the global business community, this debut highlights the challenges facing automakers and the uncertainty around EV demand in emerging markets, even as investors are eager for new opportunities in these regions.
This IPO is the right action for us to take a step forward to further Indianize our operations, and we want to become a home brand or the trust brand in India. While the IPO is an important milestone, but it's just the beginning. We will put our all efforts to satisfy our customers with our prominent products and services and uphold our shareholders' value, and also contribute to the India's sustainable growth with continued our investment.
And that's it for Basis Points. I'm Maiki Oreta. We'll be back tomorrow for more news on the financial markets and more. Keep it here on BNC, the Billionario News Channel, always on top.